Welcome. This is India Market Open. We are taking stock of how things have fared as far as the futures and options space is concerned. It certainly was a day to reckon with yesterday when it comes to the Nifty, moved above that resistance of 22,800, and at the moment, perhaps potentially testing 23,000. This is a level perhaps a lot of participants in the markets were not expecting, but it has come to be. We're within touching distance of that right now. Let's see how things have in fact fared in yesterday's day of trade. So it was a day of strength, and we did see a lot of traction on the upside with the Nifty, of course, climbing to a new life high, and along with that, a substantial increase in open interest towards the May futures as well. A lot of traction has come through as far as the bank Nifty is concerned as well. So that's where once again we've also seen a lot more longs building in, or rather unwinding as far as the bank Nifty is concerned, because that's where we had some amount of shorts. Remember, the bank Nifty has been a relative underperformer, which is why there's a little bit of catch up coming through there as well. A lot of that was on account of some of your relatively smaller PSU banks. Now, moving on to what we can in fact expect as far as the option market is concerned going into next week and coming down to the Nifty, naturally and perhaps on expected lines, we saw a lot more traction when it comes to puts. A lot more puts written even as the Nifty moved higher, and we're starting to see a little bit of a shift as far as your ranges are concerned as well. Now, we did see a lot of writing around 22,800, perhaps on expected lines too, because 22,800 was that big hurdle which was taken out, and now it seems that's going to be a little bit of a near-term support, if you may. In terms of your overall open interest distribution picture, again, keeping an eye on how things are panning out. With respect to this upcoming week, at least in terms of max OI, on the higher end, we're keeping an eye on 23,500 call. That's where we're seeing a substantial amount of open interest build up. And on the lower end, there's a little bit more concentration and distribution across a handful of puts, where we have a little bit more traction going on around the 22,500 puts specifically. But there is enough open interest distribution around 22,700 and 22,800 as well. As I was saying earlier as well, 22,800 now becomes that mark which is going to become somewhat of an in and out kind of a level to watch out for. But let's move on and talk about the 6th of June expiry. That's the expiry which once again comes into focus. And even as we see the Nifty conquer 23,000 or thereabout, at least as far as the futures are concerned, because the futures did move above the mark of 23,000, and a lot of your option pricing will of course be based on futures, based on put call parity. But we're now looking at traction around 23,500. A lot of calls are being written there. Until yesterday, there was a lot of focus around the 23,000 mark and the respective calls. But I reckon, should we see the Nifty hang on to these levels as to where it is right now, 22,900 and thereabout, there could be a lot of unwinding coming through as far as the 23,000 calls is concerned. On the lower end, now we see increased traction building in a lot of puts as far as your 22,500 is concerned, and it's now a broad 1,000-point range if you only go by your open interest distribution. That's where. Let's move on and talk about stocks then very quickly. A lot of reactions on account of earnings. Some weakness in Lupin, Sun Pharma, and Page Industries, along with Max Financial, which also saw shorts. But a whopping day for Adani Enterprises, which was, of course, the top Nifty gainer as well, up as much as 8%, a lot of longs there. And in terms of stocks which saw unwinding, let's pull that list up as well. Short covering for ITC, Metropolis, Coforge, Glenmark Pharma, as well as HDFC Bank. Now, this is as far as how things have panned out over the course of the last session. And of course, the question really is that what do you do with this data and where do you go? Let's get in an expert opinion. We have Milan Vaishnav of Gemstone Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start with your view on the benchmarks, the Nifty. What's the way forward here?
Hi, good morning to all of you. I see a couple of things going on with Nifty. To begin with, yesterday, the kind of move that we saw was, to be very frank, was not that expected. But what I feel is that there are two things happening. One is that over the last couple of days, we saw India VIX and Nifty moving in the same direction. That is, both were moving higher. Now, this is a bit of, from a technical perspective, it is slightly unhealthy, because if we look at the historical instances, we have seen major tops getting formed when such behavior is observed. That is one thing. Second thing is that 23,000 continues to remain a psychologically important level as well. And I expect that the Nifty may widen its range of trade. It may oscillate back and forth in a wider range, but by and large, I don't expect it to go beyond 23,000, 200, 300 odd levels, even if we are seeing some upside volatility on or around June 4th. So I would expect that Nifty may move higher, but at the same point in time, it continues to remain vulnerable to profit taking at higher levels as we approach the general election date of June 4th. So I expect Nifty to, at the most, continue to move higher towards 23,000, 23,200 levels. But again, at that point in time, we might see some profit taking playing out in the markets.
So based on that, Milan, I believe you're playing a short strangle on the Nifty. Can you take us through what expiry this is and the premium play here?
Yes, this would be the last week where I would be playing Strangle, because for June 4th expiry, either one will have to take some definitive directional bias, or one will have to play out completely safe by taking straggles. But this week, I would be going with a straddle with a bit of a wider range. I would be selling 23,300 call and 22,600 put for 30th May expiry. We would realize around 101 rupees of premium. And as a measure of risk management, we would exit the trade if Nifty ends up violating 22,600, or if it ends up taking out 23,300 levels.
Strangles at this moment, specifically with respect to the 31st May, are always going to be a double-edged sword. So you do have the advantage of expanded option premiums because implied volatilities are so high. But on the other hand, of course, you also do tend to see very, very sharp movements. But as Milan has mentioned, the way to perhaps curtail your losses in such a strategy is that as soon as it hits one of these levels, that the strikes that you have employed in this moment, in this particular structure, well, you move out of that. And of course, beyond that, you continue to stay and, well, hope that you can, in fact, make the best of these premiums. But moving on, what stock is on your radar today, Milan?
Agam, I'm looking at Reliance this time. The stock made a very minor double top on the daily charts and has been in a mildly falling channel as a part of consolidation. And the stock is once again attempting a breakout. We are seeing on-balance volume reaching towards its high well before the actual price breakout. So all this picks out well in favor of Reliance. I would suggest going for a call spread where we would buy next month, that is June month's 3,000 call, and would be selling 3,100 call. For Reliance, we would be paying a net premium of around 37 rupees. Therefore, maximum loss would be to the extent of the net premium paid, that would be 9,275, whereas we are staring at a maximum profit potential of 15,725 rupees.
All right, so there you have it. That's a straightforward, we'll call spread as far as Reliance Industries is concerned. Milan, on that note, taking a moment to thank you for joining us and taking us through your views in the markets, also helping us with a handful of option structures that we can, in fact, go ahead and deploy there. And with that, it's back to you all.